Welcome back. Quick technical review for today, February 18th, after a challenging start to the session. With a number of accounts in the portfolio hitting their day loss limits, the focus shifted to containing damage and stabilizing performance. From that point on, the rest of the day reduced the net losses by roughly 50% versus the early drawdown. Today we also had the FOMC minutes at 2 p.m. In practice, there was no meaningful impact on market structure from that release. The broader narrative hasn't changed. Inflation expectations are already trending lower. And that's been well telegraphed, including comments from Cathie Wood about CPI coming down. So today's PL is not a macro story. It's a process and execution story. The main issue came from the opening minutes of the session. Between 9:35 and 9:38, there was a cluster of trades taken in peak volatility, including full-size NQ exposure. That early sequence is what caused several accounts to hit their day loss limits quickly and created the bulk of the drawdown for the day. I am reviewing this approach and will update everyone at the end of the week on any changes to approach. After that initial phase, exposure was reduced and the trading shifted mainly to MNQ and MES. From that point forward, performance was much more controlled. There were a number of decent winners, around plus 390, plus 405, plus 180 to plus 260, and several plus 345 trades later in the session, mixed with smaller losses. The key point is that the second half of the day materially improved the equity curve, cutting the earlier drawdown by about 50% rather than allowing it to continue to deteriorate. This wasn't a signal quality issue, and it wasn't driven by news. It was a position sizing and session timing issue. Using larger size in the highest volatility window of the day means normal opening noise gets amplified into account-level risk events. Once that risk was reduced, the system behaved in a much more stable and controllable way. Going forward, this is a rule-based adjustment, not an emotional one. Either no NQ exposure before 9:40, or start the session with MNQ only. Or apply a hard early risk cap to prevent the open from dominating the entire day's result. The objective is simple: separate the most volatile part of the session from full-size risk, and let the strategy operate in a more stable regime. There's no emotion in this. This is just part of running a portfolio of accounts. Risk was hit early, risk was reduced, and execution improved through the rest of the session. There are 2 trading days left this week, and the focus is on clean execution and controlled risk. Today was about damage control and stabilization after a difficult open. The adjustment is straightforward, and the focus now is on applying that structure consistently going forward.